Sorry, commodities falling to the lowest level in 2 weeks on concern that a Greek default would slow global economic growth and curb demand for raw materials. My next guest runs a silver exploration company, John Smith. He's the president and chief executive of Silver Standard Resources. The stock is up about 60% year to date. He joins us now. Good to have you with us, John. Thanks so much for coming in. For those that don't know about the company, just explain a little bit about the basis, because you've got a lot of projects in development. And the resource, I guess, in terms of what's been found, that puts you in a really different league.
Well, we have the largest resource of any silver company, and that's a legacy to the past CEO and the past business model. So we started off with about 2 billion ounces of silver in ground, and I joined the company in August last year, and really I was brought on to look at how we develop, produce projects, get them through to metal into cash flow. So it's a unique opportunity that, as a miner, you don't normally get. You're usually hunting for resource, but Silver Standard has lots of it. So we're migrating from that exploration company to a full spectrum mining company. That's what we're trying to do.
All right, so the strategy has changed a little bit. Yeah. Where are you getting the capital? Because you've got a bunch of projects on the drawing boards.
Yeah, and that was my first problem. When I joined the company in August last year, we had no capital. So I took two projects that were not strategic for us, that were in the wrong part of the world, and we put them into a spin-out vehicle and took them to market. And
this is the initial public offering that you did?
Yeah, for Pretium.
Right.
And Bob Quartermain, who was the past CEO, saw the value in those assets, came back to market, took the company, and we got 215 million cash, and the rest we took as equity in Pretium. So we sit now with about 30% in Pretium, giving us exposure to gold and also to just that marketplace. And from our point of view, we've got cash in the bank, and we're now sitting with about 360 million and ready to build.
All right, tell me about the building. What's operational right now?
Yeah. So the first project that Silver Standard had started with was a mine called Praquitas in Argentina. It's
open pit.
It's an open big one.
Yeah.
So this is the largest silver mine in Argentina. Produces between 8 and 10 million ounces of silver per annum. And what we've been doing in 11 is trying to get that set up, benched, performing properly, to allow us to get into our big projects. So next year we've got two big projects we're focusing on. One is Piteria down in Mexico. On all up, that's about 700 million ounces of silver between the surface and the underground mine. And then we've got another mine in Peru that we're looking to get up and going, which is another high-grade gold-silver play. And then behind that, we have a whole swage of project opportunities.
So what are the estimates in terms of production for Silver Standard, let's say going out 24 months?
Look, I think we're stuck with the mine that we have just now,
right,
and that's going to give us 8, and we'll keep moving that up towards the 9 and pushing as much as we can. We'll try and get San Luis, our Peruvian project, up and going, 2014 end of, 2015 likely. That'll bring in another 2 million, but a lot of gold. And then we're looking at our project in Mexico, which is effectively 7 to 11 million ounces. That one will ultimately bring 2015 onwards.
Now, I'm glad you mentioned gold, because that typically is the byproduct, right? I mean, you end up with these kind of mining companies. One of them says, all right, they're a gold company, but they produce silver, or a silver company and ends up also producing gold. I mean, they're found in similar geological formations.
Absolutely. You don't get silver on your own. You tend to get it with lead or zinc or gold. And it's interesting how companies will get almost like a zero cost base, because what they do is they take the byproducts that's not their primary, like silver or gold, and they'll trade them off against their cost line. You don't see it in the revenue line. So you can get companies that say we've almost got a zero cost base and all the upside is in price. It's just the different metals that they've got. And for us, we're rich in silver, a lot of gold, and lead and zinc.
Tell me about the price of silver and where it becomes profitable for you to get it out of the ground.
Yeah. Look, where silver is just now is a reflection on the economy. That's really what's driving it just now, is the economic malaise. As we see the US not deal with the issue but kick the can, and Europe, we're just hearing about Greece just now, what happens with Italy, that I don't think will change over the next couple of years.
So you're thinking $39, $40?
I think it's there, at least.
At least?
Yeah, absolutely, because that's where it is today, and it's kind of benched. It's been there a while, so it's kind of drawing breath, and I think as we get more economic news that's not good, we're going to see more support. And ultimately, I think silver, long-term, is an industrial metal. About half of it is used in industry, and it's the most conductive metal that is, and it's used in photovoltaic cells. So if you think tomorrow's technologies are using a lot of silver as well as medical, and therefore that's a big leverage to it. Because silver's there's about 1 billion ounces of silver produced per annum. And it's just a small marketplace. It just needs a little leverage in terms of industrial use to kick it along. So for us in Silver Standard, great position, great projects, bringing them in is really the focus of the attention.
What about per ounce costs getting it out of the ground of these mines?
Briquetta's mine is, we keep working on the costs. It's a real focus for us because we know that that's our biggest Achilles heel is keeping your costs under control. And we're doing a lot of good things around restructuring, trying to get productivity agreements that tie towards the production and really managing it hard in Argentina. Peru and our Mexico projects are not too bad. It's a capital cost structure. Operating costs are quite low. So long term, it works out good for us.
I want to thank you very much. John Smith, Chief Executive of Silver Standard, giving us some insight into the silver mining industry. Metal prices drop amid concern that European debt woes may weaken global growth. But my next guests say that the best opportunities are in gold, silver, and indeed even some fertilizer stocks. We've got John Stephenson. He's a portfolio manager at First Asset Investment Management, where he's responsible for about $2 billion. And also with us, Frank Holmes. He heads U.S. Global Investors. His Global Resources Fund was the top-performing natural resources fund in 2010. He helps manage $3 billion. Gentlemen, good to have you with us. Frank Holmes, let's begin with you. The case for metals is a case also for industrial metals. Copper, zinc, tin, nickel. You're just back from China. You spent about, what, a week there?
Correct.
What did you see?
Well, we took the train. There's lots of the negativity over the speed rail. It was 185 miles an hour and zoomed all the way from Shanghai to Beijing. And it was incredible to witness all these new apartment buildings being built, which basically the government is mandating to create economic opportunities for the working person. And it's just phenomenal to watch as you travel along, and trains are built 20 feet above the ground on a super cement platform. It is smooth. It is very, very impressive to witness. Going to stores, they're all booming. I went to a Gap store in Beijing, and it was just booming with locals. So this idea of loving American products, it's very robust what's taking place.
So, John Stephenson, does this mean that there's going to be continued demand for metals, for building and other infrastructure in China?
Yeah, without a doubt. I mean, China is the engine of the metals business. To be a good commodity investor means being a good China watcher. And they're number one in demand for copper, zinc, nickel, and aluminum. So they are the key market to watch, and ultimately they will continue to be very strong.
All right, John, so those are industrial metals. Talk also about precious metals. We seem to have a confluence of events. Demand for industrial metals coming out of places like China, but then many people worried about the value of fiat currency. That's good for precious metals, right?
Yeah, so exactly. There's really two sides of the coin. One is the industrial or base metals. They're really a global growth story driven by China. And then there's the precious metals, which is really a currency trade. And that has to do with all the concern, as you mentioned, on the fiat money. And I think when you look at the Swiss National Bank, who's basically quintupled the money supply in a year, you look what's happening here at home, and you look at the whole European situation broadly, many investors are scratching their heads and saying the only way out for most of these governments is to print more money. That's great for gold, and that will drag along silver as well. I think gold goes substantially higher than where it is right now.
Frank Holmes, your thoughts on gold and silver? I mean, is this really just a situation where the same stack of paper isn't going to buy the same hunk of metal in, let's say, 6 months?
I don't think so in 6 months, but what's important short term is that we're due for a correction. Over any 12-month period, the average price for gold is like one standard deviation move would be 15%. We're now up over 30%. And historically, we go through these type of corrections like we're seeing today, and we can have big gaps down. But as soon as it falls around 15% from its peaks, then all of a sudden gold would start to look attractive like it did last year when QE2 was announced in November, October period. What is really important to look at gold is not just the fear trade, which is dominating us right now for many reasons, and good reasons why, but there's that love trade. And the love trade relates to the GDP per capita in China and India. And you have a function in Bloomberg that lets you take a look and break these things down. And the correlation of GDP per capita of Chindia with gold prices is so close and tight for the past decade. And we don't see that being derailed. And when we look at emerging countries, we look at money supply as a key factor. We also look at real interest rates. Well, what we're seeing is that the only country, or the 7 most populated countries right now, that have positive real rates return are Brazil and Turkey, and both are dropping interest rates. India's dropping interest rates. They all have negative real interest rates, just like the G7 countries. This is always a wonderful time for gold.
All right. John Stephenson, you heard Frank Holmes talking about a pullback in the price of gold, maybe about 15%, but then it moves higher after that. What are your thoughts?
Well, I think that's certainly the question with gold. Is it in a bubble or not? And I think many people think it is. I happen to disagree that it is in a bubble. I think, the reality is I believe a default is imminent in the Eurozone, first with Greece and possibly with Italy and some of the other actors in that space. And on that news, there may in fact be a pullback in gold. But I think the trend line is solidly up, and I think gold is going substantially higher than, the 1830 or so it is right now, and it's going to go marching up well beyond $2,000 an ounce. And I think the reality is it's being driven by this fact that it's a currency and has been for thousands of years. Now, clearly, when we get positive real rates in the U.S., the gold trade will be over, but that's what's driving it right now.
Frank Holmes, what about the poor man's gold, silver? Would you be investing in anything having to do with silver right now?
On any type of pullback, absolutely. I think it's just a great
for the same reasons. Plus, you've got the industrial use of the metal.
Absolutely, and you just had Standard on,
right.
And great company. I think their production, they're just ramping up production. So on a quarter-over-quarter basis, they grew around 27% on a per-share basis. The peers for all the gold and silver stocks for the past quarter grew at 3%. So they have a great opportunity as they have more operations coming on stream in Latin America and Central America. So if they can maintain that production per share unit, I think the stock can trade higher.
John Stephenson, your thoughts on silver, and I guess I'd love to know what you thought of John Smith and Silver Standard. Would you buy the stock?
Yeah, I would buy the stock. I like the stock. I mean, it's a single mine stock right now, at least from a production standpoint, but it's growing its production 20 to 25% per annum. That's very positive. It trades at 0.8 times NAV, so that's it's cheap, in other words. So I like it. I've recommended it on the show before, so I do like the name. In terms of silver in general, I do like silver as well. It tends to trade in lockstep with gold, but I would caution people that it is a much shorter window. So if you're bearish on gold or you're starting to get nervous, then you want to sell silver before you sell gold.
John Stephenson, this idea of comparing major mining companies with junior miners. I know that there are various indexes and exchange-traded funds which focus on gold mining shares, but then there's also the junior gold mining companies. Is there a distinction to be made right now for investors?
Well, I think it's important to point out that there's lots of junior miners, and many of them are prospective, and meaning that they don't have current production, but they do have a discovery that needs to be proven up. If you look at the mining cycle in general, the stock reacts very favorably to initial discovery. Then, of course, it trails off, and then as details on the feasibility study, the pre-feasibility and the final feasibility come out, it tends to trade up, sells off a little bit once that's fully digested, and once construction begins, it ramps up again along with production beginning. So there is a cycle to be played. There's a lot of money to be made on the junior game, but given that I'm very cautious on the overall tone in the market, this is also the sector that's going to get hardest hit. It will be the sector when growth resumes and globally that will come back the fastest, though.
Frank Holmes, quick question for you. Gold or actual gold bullion, or maybe even some gold jewelry?
Well, first of all, buy some gold jewelry for the one you love, because if you buy a gold stock and it goes down, you're in trouble. So if you buy some gold jewelry, then you buy a great gold stock like Franco-Nevada that pays out monthly dividends.
Well done. I want to thank you, gentlemen, very much. Frank Holmes, U.S. Global Investors. John Stephenson joining us from First Asset Investment Management.